Webinars. Thank you for joining us, and we look forward to an engaging and insightful session today. Friends, on 20th December, we will have our 200th webinar. The most prominent speaker will be there to speak on catalyst for corporate growth, unveiling the next wave of regulatory reforms. So this is the topic for futuristic aspects we have selected. And I request all participants and other dignitaries, please join this webinar. We have invited the best of the best faculty of India. Now coming to today's topic, SME. SME listing entities are typically promoter-driven for family-owned business or startup, with a high concentration of shareholding amongst a few promoter or entities within the promoter group. These companies often have limited presence of equity, private equity, or sophisticated investor who can act as a check on the influence of the promoter. And they have also having a limited resource to get the fund from the market through banking channel and other sources. With the increasing number of SME issues, investor participation in such offering has grown significantly. The ratio of application to allotted investor has surged from 4 times in 2022 to 46,000 in 2023 and further 245 times in 24. So you can understand the interest and how the investors are chasing the SME equity. SEBI has observed instances where SME listed entity diverted IPO and right issue proceeds to shell companies controlled by promoter and other inflated revenue through circular transaction among related parties. Such practices create misleading positive sentiment to attract investors and creating a bad feelings in the investor, and it will definitely hurt the future equity buildup. In this regard, SEBI issued a consultative paper on November 19, 2024 to review the SME segment framework under SEBI regulation and applicability of corporate governance provision under SEBI LODR Regulation 2015 on SME companies to strengthen pre-listing and post-listing SME provisions. The objective of this webinar is to discuss and deliberate on the proposed amendment as well as gather suggestions and comments on the consultative paper following in-depth discussion during the session. Friends, today we have invited very learned speakers for this webinar, and we have requested regulator, stock exchange, and the player from the market, those who will discuss today. So first I extend a very warm welcome to our learned speaker, Mr. Ankur Bishnoi. Ankur is a Assistant General Manager in SEBI. He has more than 16 years of experience. He has worked in various departments of SEBI during his tenure, handling primary, secondary market, and has worked in market intermediaries regulation and supervision department, integrated surveillance department, corporate finance division. In his current role, he has handled policy-related work in corporate finance department, CFD. He oversees handling of policy related to public issue and other policy-related matter pertaining to primary market. And friends, I will share with you, I am the subcommittee chairman of KPI, the key financial indicator. In this, Ankur is working with me, and I can tell you, he is one of the finest officer in SEBI who has a knowledge and he has experience also, and he expressed his point of view very strongly. So today, the SME segment things which has changed. The Ankur has a major role to play when designing this. So I welcome Ankur, and we will definitely get benefit of your experience, and we will understand these all things behind this. So everybody should see that what is the reason why SEBI has brought out and the real issues people can understand and the rationale on this. So Ankur, welcome. And then we have Lokesh Bhandari, is Associate Vice President Listing Approval at NSE. He also looks after the SME IPO. And actually, the SME IPO and BSC, NSE, they are the people who handles this. So Lokesh, he's worked experience in NSE around 1 decade, where he had been part of the entire listing department, both listing approval and listing compliances. Further, he is also closely working with the various SEBI team and actively discussing on various regulatory framework. Lokesh is just joining. He is in a meeting. He is just finishing to join us. I welcome Lokesh in his absence. Then we have Mr. Sachin Jain, is the General Manager, Listing Compliance at BSC. Before joining BSC, he was in Paytm, Payment Bank, Just Dial, and Atlanta. He has more than 22-year experience in strategy and corporate compliance and rich experience in corporate law, SEBI regulation, and IPO and due diligence. Whenever I met Sachin, his private industry experience and the now regulatory experience is a deadly combination, and he understands the issues and he wants to the best part is how to solve this. This is his focus. So I welcome Sachin for the program. We have Anjali Agarwal, Partner Head, Capital Market from Corporate Profession. And we have Mr. Manoj Kumar, Partner Head, M&A and Transaction, Corporate Profession. Both are looking after merchant banking. Then Ruchika Sharma, Associate Partner. She also looking after merchant banking activities. And then Mr. Sivanshu Villa, Founding Partner, Market Capital, which has applied for AIF. And he is working for different fund-related things. Friends, before starting this session, I will just tell you, I'll just give you some background and introduction on SME market so you can understand how much growth has taken place in these market. Now, just see this, the SME market, if you introduce, today the current listing, there are 565 companies which are listed in NSE and 524 in BSC. So this is till date. Currently listed is 417, 328 because various companies have migrated and suspended. 140 companies has migrated from NSE to NSE main, and 182 companies migrated to BSC SME to BSC main. And not only main, but they can go to both the stock exchange. 12 companies are suspended in NSE and 28 companies suspended of BSC of non-compliances. Then listing versus fundraising, if we see 24, 25 till 15th October, 117 companies has come in NSE, 42 companies BSC, and the last year 138 companies in NSE and 58 companies BSC, and then 62, 63, 33, 31. There's a indication graph is going up. And how they have raised the fund, fresh issue, they have raised 4,387 in NSE and 4,348 in BSC in 24-25, and then 23-24. So suddenly you can just see the growth. So fresh issue in BSC, offer for sale in NSE and offer for sale BSC. So all these companies has raised fund through the SME market. If you see the industry-wise analysis, that how much industry-wise SME IPO. Shivam, next. The capital goods 21, service 8, construction 9, 8, 7, consumer durable. So you can find there is no fixed parameter that this type of companies are coming. You can see multiple companies are there. And always when earlier there was a boom in 95, boom in 2003-4, when so many financial companies came. But here you can see financial companies, only 3, or other companies are not that much. It's a widely held portfolio. Then if you see the top SME IPO in terms of oversubscription, so this is the Home Food Private Limited. This is one segment where 5.54 crore rupees they have asked, and their oversubscription was around 1433 and 2555, and total was 2013. So you can just understand they have asked 5 crore, but they got multiple numbers. So KC, Medica, Men Organic, Max Poser, and Magnament Life Care. These companies has got maximum. Interestingly, 3M name is there, which are the company which has got the highest number of oversubscription. Then top SME IPO in terms of fundraising, Shivam. Then KP Green Energy, the issue size was 189, and the issue price was 144, and then current market price is 571. And then Sastra Electronics 186 issue size and 283 issue price, 610, 225 to 230, 190 to 421, and 59, 40. This is the top SME IPO in terms of fundraising number wise and what is their status. That is indicative in this slide. Then top SME IPO in performance wise, if we see, so Osani Metals and Mineral Process, this is a mineral mining company which came out in 4th March 2024. Issue price was 87 and current price is 1,167. That is a 1200% growth. 1200% increase. Go back. So then Australian Premium Tech Infosys. So they have their percentage wise increase 1200, 800, 600, 600. And interestingly, the industry is not limited to one segment. It is multiple industry. So this is the top SME IPO performance. Next. Now, post-listing fund strategy, it is not that they have brought out fund and then stop. After that, two companies, NSE, one company, they came out FPO, right issue, they came out 9 companies, 11 companies came out with right issue, 2 companies came out with KPI, and then QIP, and then 169 companies came out with preferential issue. So they raised fund. And fundraise is also 177 crore or 180 crore, then 550 crore right issue, QIP 116 crore, and the preferential issue is 2000 crore plus. So this is a post-listing fund strategy they have done. Listing gain versus listing losses. If you see that on the date of listing, gain in BSC, the NSE is the 224 companies gain from the issue price, and losses 31 companies total. But if you see up to 15 October, 185 company gain and 6 company loss. Then last year, October 15, 2024, from the issue price, that is 39 to 25. Same happened to BSC also. 91 companies, they got the higher price, and the 9 company, they were the less price. So this is the total listing gain and listing losses issues are there. And then the success, after the success, there was some regulatory concern, because these companies when came out, then regulatory concerns also came out. Because you are aware that in India, MSME is the main funding source for the government through GST and other thing. And then they are one of the best employment generator in the country. Now, no doubt, these companies which has done this, they have done good job, because these companies, they cannot get fund easily. Startup was always looking after PE, but now so many startup are asking for issue, and then MSME is also not getting proper business. And we have seen, though it was a funny way it has come, it was having some scandalous way, that one has a showroom and they came out issue. But if we go to reality, anybody who has a business, who have a minimum criteria, which the SEBI has allowed, anybody can bring out issue. Only thing is, this is not the business size. This is on the other aspects which one should bother about it. So this was the one purpose, and the main purpose was that SME, they can get the fund and they can grow. And we have seen the growth also. Now there are more than 1,000 companies are there in the SME, and they are creating value for the market. Now suddenly something has happened. Shivam, go back. The increased investor participation, because 4x to it has gone to 245x, mean few shares and multiple people were chasing on this. Then promoter-driven structure, because that is happening, the high stakeholders, shareholder concentration among promoter and limited private equity sophisticated investor presence to monitor promoters' influence, because this is more concentrated by promoter, and those who are in the market, they were not that vigilant the way P and other sophisticated institutional investors are there. Misuse of issue proceedings that I have told earlier also, that is also one point which has come out with the SEBI and stock exchange point of view, the diversion of false shell companies, diversion, inflating revenue, circular trading and other things has come out. Then related party transaction, because in the listed company, related party transaction law is very tough, but here it was not that tough. So misuse of RTP transaction or fund diversion are taking place. Systematic risk, fund diversion, promoter investor exit post listing and misconduct pose risk. And the most important thing that regulator feel that this systematic risk is there. And then what happened? We have done one research on 50 companies. Shivam, next. So we done the 50 companies DRHP we have taken, and on the DRHP we have identified what types of violation they have mentioned because they have disclosed. So we identified that 39% company law violation mentioned, 22% labor law violation, 25% tax violation, stamp duty violation 2%, security law because that was not applicable, so it's a minor point, accounting standard violation and non-compliance of various other things. So this is 52 companies DRHP we have done from April to October, and in this we identify non-compliance issues, misleading, the financial reporting that was there, the delayed filing, non-compliance, they all, whatever is there, it is mentioned in the DRHP. We have taken out in this systematic way. Directors related challenges with director regularization, educational verification, form filing, and they have not filed the timely form. Company records, difficult to maintain proper record, various compliance failure, not categorized elsewhere. That is also miscellaneous issues were there. Next, that was a factor leading to non-compliance in SME that we have identified. Number one, limited resource. Because SME often, because they are doing business, their compliance is always with the auditor because he was doing, and suddenly the companies are coming out listed. So they have limited resource because here you require the efficient CFO as well as company secretary and the compliance division. So that is missing. Compliance regulation is also not very effectively managed. Growth focus, they always try to do the growth focus business, not on these things, but the process is also required. So their inadequate processes, their limited awareness they are having because they have come out with the issue, but they are not aware that if I'm coming out the issue, all compliance is also my responsibility. And then sometimes they worried about the compliance cost. So this is a reason for non-compliance of SME, which we will pass on to the SEBI and stock exchanges, that they must see that if they are not doing compliances, then what is happening? The legal consequences are serious. Direct impact is also on the promoter. Employee morale also down. Financial penalties are also there. Regulatory scrutiny is also open for these aspects. So these are the things. And then we have given some solution also that how enhancing compliance in SME companies, conduct proper initial compliance assessment, due diligence should be there, establish internal control, develop compliance framework, regular training program, appoint compliance officer, conduct internal audit, robust compliance culture. Now, the problem is that whether you are a small company or big company, if you are a listed company, you have to follow certain things. And then thing is whether it's a high or low, that is not there. And in the proposed things, which was a 6 months, you have to give result. Now you have to give quarterly result. That is also proposed. So all these SME companies should also realize that it is not the case that you bring out money and you just forget. The compliance is basic aspects. And my request to SEBI and the stock exchanges that I am finding that the proper listed companies CFO and listed companies company secretaries are finding, those who are expert in LODR and ICDR is less. So we have to work out and we have to just do this with both the Institute of Chartered Accountant Company Secretary, that more and more people should understand this part, and they should create a atmosphere for their professionals. Now, friends, these are some comments I have given. The key proposal in existing SME framework, they are bringing out IPO process, minimum application value. They are changing allocation to non-institutional investor. They are changing minimum number of allotee from 50 to 200. Restriction offer for sale is also restricting. Monitoring the issue proceeds, that you cannot you bring out, then you have to do something that you monitor this. Lock-in provision, they are changing. Restriction on the limit of general purpose fund. This is also they are strictly monitoring and then suggesting changes. Eligibility criteria, promoter group under eligibility condition, like restriction, they are putting minimum issue size INR 10 crore rupees, EBITDA in INR 3 crore or at least for 2 to 3 years. That is their mandatory face value of 10 rupees. Compulsory migration linked with post fundraising, that is also they have proposed to change. Then object and additional disclosure requirement. Next, Shivam, the disallowance of object related to repayment of promoter's loan, compulsory certificate from state auditors in case of working capital exceeding 5 crore, disclosure of firm arrangement of fund, disclosure of senior management personnel, which I'm saying the same issue. SEBI has also identifying disclosure of fees of merchant banker, site visit report of merchant banker on the part of DD, disclosure with regard to ESI, like one case has come where the vendor was not there. So that's why SEBI is also saying an ESI, PF or number of employees you have to disclose. Another proposal, they are saying offer document to be made available to public, conversion of optional convertible security, due diligence certificate by merchant banker, uniformity nomenclature, which is there in the main board, and post-listing existing opportunity to dissenting shareholders. So these are all things which SEBI is coming out with their things. Now, we will discuss and I will tell you the structure of the program. After me, Ankur Vishnoi, who's Assistant General Manager from SEBI, he will tell the rationale of all these changes on a broader aspects. Then I will request Sachin Jain, and till the time Lokesh is joining, so they will tell the stock exchange point of view of these. Then we will take up all 27 points one by one, and in this point we will give the existing provision, then what is the new provision and rationale what they are saying, and then we will discuss and take the view of where the rationality in detail through Ankur and stock exchange, and certain points which are coming out we will discuss, and wherever there is a need, the main board and difference in SME, that we will share. And in the process we will try to do this, that what is good point and where the industry has issues and where the SEBI can modify this point, and when they are coming out the finality. Because one issue is very clear, then if you have seen last year or last to last year, the issue size wise 31 issues, 50 issues, 100 issues, and then suddenly you can see number of issues has changed. So there will be a setback for all. There will be setback for the system, those who have acquainted with this, but something which is good for the investor, we should follow. We should not see who is losing, who is not losing. We should see whether investor is losing or gaining. That should be the main criteria. With these things, I will just make one announcement that next webinar on 6th December, that is on decoding of foreign exchange, compounding proceedings, rules 2024 we will do. And I will request now Ankur Vishnoi to give his point of view, the rationale behind these changes.
Thank you, sir. First of all, I would like to thank corporate professionals for invitation on this program, and to Pawan sir for his kind words. So for the regulator's view, I will start that the primary goal of a regulator is to ensure that there are compliances and to provide for a framework within which the entities and participants can operate safely and fairly. So by setting standards and enforcing compliance, regulators help to maintain trust in the market and the institution. So the main role along with development is also to protect the interest of the investors. Similarly, we expect that from the industry side, from the company side, the listed entity should not be having a short-term view, and to attract the long-term and patient capital, company needs to adhere to corporate governance norms in letter and in spirit. So with this aspect, the small and medium enterprise companies which are coming, it was started in year 2012 to serve as an alternative source for raising funds for the emerging businesses. And in last 3 years, we have seen that there has been an immense growth and immense investor participation on such offerings. And as of today, as the data which was seen, there are around 750 plus companies listed on both NSE and BSE with a market cap of around 2 lakh crores. So this is huge, and the number of investors which are now attracted by these markets is also huge, which we have seen in terms of number of applications in the IPOs compared to the allotments. But at the same time, SEBI observed that there were some instances where some SME companies or their promoters were resorting to certain means which were like not in favor of the investors, not good for the investors. So some were projecting an unrealistic picture of their operations and taking advantage of this as an opportunity to have an exit post-listing. Some were trying to, the fund raised through the IPO, they were not properly used towards the object and were misutilized. So the key risks which we have felt were like misusing of the funds raised in the IPO, and post-listing there were certain announcements or certain things which were actually not true and misleading, and then taken as an opportunity to have an exit from the company by the promoters or old pre-issue shareholders. So these issues in a certain way highlight a built-up of systemic risk, so which will eventually dissuade the investors from coming into the markets. So to have a check on this, SEBI has taken enforcement measures and taken strict actions wherever such instances have been found. There have been SEBI orders where the companies were involved in fraudulent or manipulative activities. This also included barring of companies and their management from the market and impounding the illegal gains. SEBI has also issued advisories cautioning investors about potential risks associated with investing, to see these kind of patterns which have been highlighted in a SEBI press release. So these measures are part of SEBI's ongoing efforts to protect investors and maintain the integrity in the securities market. But at the same time, we felt that to protect the interest of investors and market as a whole, there is a need to review the framework and to ensure that only companies which have good sound track record and they are having good corporate governance, and post-listing also there should be a more transparent and more disclosures by the companies. There is a need to have an upgrade in the framework. So with this backdrop, we had come out with a consultation paper. The key proposals, which if we'll discuss in the next sessions, but the key proposals on a broader level are to protect the interest of the investors, to have a robust framework on the objects of the company, robust framework on the monitoring of the issue proceeds, more disclosures, post-listing governance, check on related party transactions, promote the companies which are growth-oriented, align certain aspects of main board with the SME platform where there is a more protection of investors. And also we have some measures of ease of doing business where we are allowing companies on SME platform to raise more funds. Currently, I think they have a restriction to raise funds beyond a certain post-issue paid-up capital. So they need to migrate beyond that, and the migration is only after 3 years as per exchange requirements. So these companies are restricted to raise further funds currently. So we have taken a note of that, and this fundraising will eventually allow the company for its growth. So we have made some relaxation on those points also. So with this backdrop, so the idea of consultation paper is to strengthen pre-listing as well as post-listing SME proposals, and we have put up these for seeking comments through public consultation paper. And the role which I believe SEBI and business, by business I mean companies, is both should go hand in hand to ensure a healthy capital formation in the Indian securities market. So that is the primary aim with which we are reviewing this SME framework. So
Okay. Yeah, Ankur.
So I think exchange can now carry forward.
So Sachin, SEBI has given the broader aspect that why they have brought out this, but the SME market is governed by the stock exchanges. So you are the regulator, you are approving this. What problems you have identified and SEBI has finalized it. So over to you, Sachin, your views.
So what are the rationale or necessitates to come out with this type of proposals by SEBI? You have covered very well, as well as Ankur has covered very well. So the reason for each and every changes we will discuss when we'll go point wise what are the changes. But while we are going through the documents and due diligence carried out by the various merchant bankers or the object of the issue or the transactions they have done in the past, we felt that something need to be strengthened. The market dynamics in respect of the SME IPOs has been changed substantially since last 2-3 years. The investors who need to be invested in the IPO on the basis of information provided in the offer document, we've seen that they are not going through the document, the disclosure made in the document, but completely on the market sentiments. So to protect the interest of the investors and this segment can be aligned with the purpose for which it was introduced, we thought that certain measures need to be taken. And I will not take much time. We'll discuss whatever suggestions or proposals has been introduced by the SEBI, why we have introduced all this thing, point by point, when we will come for each point. Thank you.
Thank you very much, Sachin. Now I will request Ruchika to show the changes, and the changes is like this. First, you start with showing what is the present law, under which heading we are talking, then present law, proposed changes, and rationale, and then what is in the main board IPO, what are the things?
Okay. Good evening, everyone. So as the program structure is, I will go on to each of the proposal, and then we can discuss upon our views. So the consultation paper deals with two laws changes, one with respect to ICDR, other is with respect to LODR. Firstly, we are discussing the changes in ICDR. The changes are also divided in 4 categories. One, initially we are starting with the SME IPO process changes. So the first proposal with respect to the change is on minimum application size. As we all know, currently the minimum application size should be of 1 lakh rupees. That is the minimum size of which application can be made by the retail investors, which is proposed to be increased either to 2 lakh rupees or to 4 lakh rupees. And the reason or the rationale behind is to mitigate the risk that is involved in the SME space, and to, for the like I would say, for the more transparent and wisely decided approach of the retail investor to invest into it. So that is the rationale behind it. So we can discuss on to how, whether it is good or not, and what should be the suggestive measure, whether we should go for 2 lakh rupees or 4 lakh rupees as an industry, so that we can discuss upon.
Okay. Thank you, Ruchika. So, Ankur, now the point is that no doubt the earlier 4.5 times capital market growth, and we have seen application and also increase. But what is the main logic that 1 lakh to 2 lakh to 2 lakh to 4 lakh? That no doubt you have given both the option, either 2 lakh or 4 lakh. So we are just sticking to first 2 lakh. So the point is, it is okay, primary market you can do, but in post market, secondary market, that is also 2 lakh. So the secondary market will affect more than the primary market. This is my view. And what is your rationale on this? Let's listen to you, and then Sachin, your point of view.
So, sir, the current proposal is with respect to increasing the minimum application size in the IPO. So the proposal presently doesn't say any change in the trading lot post listing. So the trading lot post listing will remain same, but the application size we want to increase it based on the suggestions and recommendations of both stock exchanges and the merchant bankers who handle SME IPOs. The reason was that this 1 lakh limit was set around a decade back, and this was to ensure that people who have access to capital will take an informed decision, because it is a high amount of capital and it will not be put to the application or invested in the markets without giving a proper reading of the document and other things. But in 10-12 years, we have seen markets have grown. So ultimately, the limit of 1 lakh is not I will say restrictive for a smaller investors as it was 10 years ago. And now, as Sachin sir has said just now, that with this more and more IPOs coming and listing, and we have seen there have been very good listings also, there is a kind of herd behavior. And people are like, they have a fear of missing out. So what I would like to say, so they are investing without giving us proper reading of the document and risks associated with the companies. So that's why we want to increase this application size, so that at least at the time of IPO, those who are investing with a higher amount, there comes more restrained involvement without looking into the details. So we are of the view that this will ensure that only people who are having a second thought about the risk associated with their investment will only come, and will not hamper the retail, smaller retail investors.
Okay. Sachin, your view?
So, as said by the Ankur, that when this limit of 1 lakh rupees was set by the regulator, it was in around 2012-13. Okay. And after that, the financial capabilities or investment capabilities of the particular investors increased manifold. So when they are getting the opportunity to invest in the SME IPO where return is very phenomenal, now they are not thinking about what is disclosed, what is not disclosed, what is the risk and this thing, and they are investing in the each and every IPO. We thought that yes, if you are investing, you have financial capabilities, but it should be increased, so that if you are investing sizable amount, you take an informed decision. This is the sole thought behind this change, regulatory change, proposed change.
Okay. Anjali, now Ankur has clarified this. The secondary market will not be impacted because they are not talking the trading lot. So what is your view on this? You and then Manoj.
So one thing is very clear, looking at the numbers that have been disclosed in the discussion paper, the small and medium enterprises is no more a small enterprise. The type of funds they are raising, that is the issue size and the IPOs and the QIPs that have been done. So that means that clearly shows that when we used to say initially 40 years back that it is a small enterprise, that stage is over. So obviously, the application size should be increased. I totally agree. But 2 lakh, in my view, Ankur, when I'm saying I would be, this is basically I'm representing as a merchant banker and also probably some of the industry view as well. This is not my personal view. So, if 2 lakh, as per me, is a better option as compared to 4 lakh, because 4 lakh would mean that no retail investor, if you will ask me, Anjali, would you be investing as a 4 lakh rupee? It will be difficult for me to invest this kind of amount. So 2 lakh, of course, I find it on apt size. And you have clarified that secondary market transactions would be present, continuing as they are going on right now. So that's my view, sir.
Okay, Manoj.
Yeah, I think increasing the lot size in issue is not a big challenge, and 2 lakh rupees obviously is very reasonable thought to enhance the size, because obviously the SME market is not meant for a small retail investor where they can invest, let's say, in the main board segment 15,000 rupees. So that is not the intent of SEBI from the very beginning, because they want only informed investor to participate in this business because they are high risk investments. So to fulfill that purpose, increasing the application size to 2 lakh rupees or even 4 lakh rupees, I don't think would be a big deterrent to the investors to invest in the IPO. But obviously they will stop this herd mentality of investing in every SME IPO and waiting for the lottery to happen and then sell in the next first trading day or second day. That mentality would go. So that is I think better proposition to have it. 2 lakh rupees is fine. I think only trading lots should not be disturbed, because that will create liquidity hurdle at the time of exit for the investors.
Okay.
So
Okay. And
that is the thing.
okay. So the consensus is 2 lakh rupees. And Shivam, you can do your poll also. And Ruchika, what is the you can just show the main board is minimum sizes.
The minimum application size in main board is between 10,000 to 15,000. The present.
Because that is another aspect. No?
That is a liquid investment. So obviously there this risk is not there.
Correct.
Next.
Okay, so the next proposal is with respect to NII allocation, non-institutional investor allocation. NII allotment in book built issue presently is on proportional allotment basis. So the proposals are that in cases of application sizes up to 10 lakh rupees, 1/3 of the allocation would be 1/3 of the total allocation would be allotted to the NII applicants, and 2/3 of the total allocation would be allocated for the application sizes above 10 lakh rupees. And this would be done not on proportional basis, it would be on the basis of draw of lots, which is there in the main board also. So that is the proposal for NII allocation.
Manoj, can you just for the participant, because I can take a view, Ankur's view on the aspects, rationality, but can you explain this in a practical basis?
Yeah, so right now for main board IPOs, all the allotment happens all under every category. It happens through draw of lots. So let's say for a particular amount, there are 20 investors in one category there, and only 5 can be accommodated in the size of the issue. Then there will be a draw of lot, and top 5 would be taken as the investors, and all others money would be released or refunded, as the case may be. So this same process would come here in the SME segment now. And for non-institutional category, other than retail non-institutional category, they are making now 2 different segments. One who are investing 10 lakh rupees or more, and one who are investing less than 10 lakh rupees. So there will be two different category, and based on that, the total allocation to the non-institutional portion would be divided in two parts, and then there will be lottery. So I think this is a good move, because proportionate allotment sometimes give favor to certain high net worth people who can invest multiple times than the amount needed in the particular category. So it is fair and equitable distribution mechanism. It will totally based on the lottery system. So it is much fairer than existing provision.
Okay, Ankur, now your turn.
So, sir, this has been a tested provision. So, in main board, we saw that the NII category were highly oversubscribed, and the number of applications with high oversubscription were not much. It were only in thousands. So that means there were applications which were ranging to hundreds of crores to thousands of crores also in some of the issues. And after this proposal, we have seen the number of applications have increased, oversubscription has reduced, because the advantage of making application of a higher size has been eliminated. So in the proportional application, there is always a tendency to make application for a higher size, and it favors some of the investors who can leverage based on their capacity and make application for a higher size. And it was for the smaller NIIs, it was a position of disadvantage. So because they were in no position to compete with them. So to address this, first thing we did, we have done a separation between a smaller NII category and a larger NII category by putting up a threshold of 10 lakh, application size of 10 lakh. And then second, with this draw of lots, we have eliminated this tendency to make a application of higher size based on a leveraged position. So same thing we want to implement in the SME IPO, and we believe we have already seen the results. So this was a plain thing to replicate in the SMEs.
Okay. Sachin, what is your experience in this case when you have recommended this change? Or what
So-
will... Yeah.
Same thing. Earlier, when different regulation was proposed for the SME, the reason that there were the few takers of the SME IPO. So to facilitate that who are coming should get the allocation. Now, if you see, the application size and the number of applicants increase manifold. So it is better that it should be aligned with the tried and tested method, which is in the main board. That was the third process.
Okay. Okay. Manoj, what will be the impact now? No, you have to unmute yourself.
Yeah. So I think it will make the investment by many people who are HNI, who are high net worth people and want to invest more than the minimum lot as a retail investor, would participate in a larger way, and their situation would be similar for all. It will not be that if I have, let's say, 1,000 crore rupees, I can put in for IPO of 50 crore, I can put 200 crore and then get larger chunk from the issue. So that situation would not be there. So it is fair and equitable. I think it's a good for the industry, good for the issue, good for the investors.
Anjali, your...
Sir, I think in the main board only about 2 years back this amendment was made, and as Ankur said, we have seen this as a tried and tested method. This should do good in SME as well. I would want to give a very crude example. मुझे अपने बच्चे का admission कराना है school में. It should not happen कि rich people should be should be able to leverage it. Its draw of lots would be there so that everybody is in an equal position to get a chance.
Okay. Shivanshu, you are talking to the investor, the family house office. What is your view on this? What will be the impact of this?
Sir, currently, I think due to over leveraging, QIB portion gets over exaggerated numbers, right? And when you get the over exaggerated numbers, there is much more retail participation, because retail participants are not usually seeing the financial numbers, but how is the QIB portion subscribed, right? So I think in good amount of time, you will also see that there is there is less amount of price manipulation and the price inflation would be less in the SME IPOs.
Okay. Ankur, this is question number 1 and the suggestion 1 and 2 I am combining. I have met so many investors, those who have invested money on the first day on a higher rate they have purchased. And when you talk to them, then you will come to know that he is not aware that which company, which industry he has just put money. So the way this is FOMO concept has started, fear of missing out, it is really a killing to the market, not the developing the market.
Correct, sir.
Okay. So similar provision already exists in main board. Now next point, Ruchika.
Third proposal is with respect to minimum number of allottees. So for an SME issue to be successful, the minimum number of allottees should be 50. This is the existing provision. The proposal is to increase the requirement from 50 to 200. And the rationale behind it is because since 2010, there have been drastic increase in the number of investors, the number of demat accounts, and the public who are investing in the stock market. So this is the rationale behind increasing the number of allottees from 50 to 200.
I think Ankur, any other than because this is you want to make a broad base. Any other point in this?
No, sir, that's the point. And we have seen consultation paper has some data also. So we have seen this number is easily met by the companies. And to ensure that there is a higher number, we believe that it will be acting as a strong check for a company that only if it is good and having interest from the market will try to tap the markets.
Okay, Sachin. Sachin, you have to unmute yourself, please.
Yeah. So when initial SME provisions came, we were in the era of the Companies Act 1956, where up to 50 allottees we can consider it not a public issue. So the same provision taken in the SME IPO for the public issue up to for the minimum 50 allottees, so that we can take care of the Companies Act provisions. Okay. And at that time also fear that there will be a few takers. Now, as per Companies Act 2013, the limit is 200 now, increased 200. So we thought that yes, investor is broad-based, number of investors also increased, and the Companies Act provision also there up to 200. So we should consider to increase it to 200, and it will increase the participation in the company also of the investors.
Okay. Okay. Manoj?
I think it is a good move. 200 would, at least to begin with, 200 is a good move. I think for large size is SME IPO, it can be up to 500 plus also. So I think that data shows that this is very easily achievable and it is achieved in almost every cases.
Until you are also
Totally in, sir. Totally in. And 200 will definitely help in migration as well, because there the number of shareholders required is 1,000. From 50 to 1,000 in 3 years' time used to be a task, but from 200 to 1,000 would be a good move, easy move.
So what is the Ruchika? The main board is also
Minimum
minimum
allottees are 1,000.
Okay.
Yes.
So it's a alignment. Next.
Next proposal is, yes, with respect to offer for sale. So at present, there is no restriction to not to come out with an offer for sale portion in the issue size of SME IPO. And from the data, as it is mentioned in the consultation paper, it was seen that 2 pure OFS SME IPO came in financial year 23-24 and 1 in 24-25 till October. And there were total 52 issues wherein the OFS component was there in the overall issue size. And out of 52, 30 issues were there where the OFS portion was more than 20%. So now the proposal is, because the rationale behind the proposal is to, these are the small companies and they want to raise fund for the growth of the companies. And so the So the consultation paper says that the company should have more portion of fresh issue so that the growth of the companies can happen rather than giving opportunity to the promoters or to any investor if there are. And the proposal is to restrict the OFS portion up to 20% of the issue size. So that is there.
So, Ankur, the rationale on this, which is something beyond the papers.
So, sir, rationale is very well captured in the papers, and the idea of starting SME platform was to facilitate smaller companies and make them access to funds for their growth purpose. And OFS money doesn't go to companies, so it is not put to any use for the company. It is purely going to the promoters or the selling shareholders, which can be utilized by them for their own purpose. So this market is not to promoters coming. We want promoters to stay with the company, participate in the growth, and then involve public through a fresh issue. And that's the purpose. And that with that rationale, we are restricting the OFS part.
No, I think you are absolutely right that the SME IPO is also a very small amount. And out of that small amount, if this money is going for capital buildup, then growth can take place. If money is just for the retirement of the loan of the promoters and other thing, I think that is a very well thought decision. Sachin, you have any additional point in this?
No additional point. Well said by Ankur and others.
Sir, I think only challenge maybe in some cases there will be venture capital funds and the company has a commitment to give them exit after 3 years and that date is coming. And if there is no option of giving OFS, then they have to wait for further a few years and find some other venture capital fund or private equity fund to carry the legacy, transfer the shares, and then come out with the main board IPO. That this is a challenge because such companies would find it difficult to convince the investors to let the company come out with IPO, and only 20% of their share would be liquidated. Rest they have to sell in the market over a period of time. So there may be some challenge. Otherwise, I think it's a good for restricting the promoters to take exit in the offer.
Ankur, can we do this that we can give some way out for the VC fund?
So, sir, this was also thought of. Actually, the suggestion from the exchanges and merchant bankers was to totally restrict the OFS based on these inputs that some exit may be needed. So we have permitted a certain portion. We don't want to make any differentiation between promoters and other selling shareholders because that will give some jugglery before listing. So we will see transfer of funds from promoters to, because currently VCPE we don't identify. We identify promoter and non-promoter.
Yes.
So putting restriction only on promoters and not on non-promoters will definitely lead to some working out before the listing and some shares moving from promoter to non-promoter, and then or categorization of people in their relatives who are not forming part of promoter group. So to avoid that, we have made it transparent and it is same for everyone. There is a small limit which can be used for OFS. Rest exit if they want. They have to wait for the listing and post listing.
They can. 20%.
I am okay with the 20% size restriction on the size of the OFS. The second restriction is 20% of the total investment can be liquidated by any particular kind of fund or person who is participating in OFS. So let's say there is a venture capital fund who is holding 20% in the company and they want exit. If the first limit is there, then they can exit fully through the IPO. But if that limit is changed to 20% of their investment, their 80% would remain there even after listing. So they don't have the mandate to continue in a listed company.
Manoj, it's 20% of the issue size. It's not 20% of their investment in the company.
That is also a proposal.
Both
So,
proposal
sir,
lengthy.
we have a understanding of this also, and we have a test case also.
Okay.
So, in main board IPOs, when the startup IPOs came from year 2020, we saw these that startup companies are tapping the markets for IPO. So there were companies where there was the founder or the promoter were having very less shareholding, and there were PC and VC investors.
Yes.
So there were issues where we saw that PE and VC have sold their entire holding in the IPO, and the performance of those companies post listing was not that good.
Right.
Therefore, in main board provisions, also a regulation was implemented that OFS was restricted based on the holding of the investors. So that skin in the game of promoter founders through MPC and the other selling shareholders who are like part of the journey of the company before listing should be retained so that they continue to guide the company and be with it, because they are also taking part in companies board meetings, and the VCs or PEs have their nominated directors on the board. So their association will definitely help the companies, and it will also protect the investors, because a normal retail investor will not be that much participative in the company's board or other agent items or its working. So with that logic, to have skin in the game, we have restricted this, and it is also there in the main board.
Okay. So we can write this suggestion which we have received, that 20% the BC issue, if SEBI can consider, it can be useful.
I think the only problem is in some VC cases, they have in their mandate, they are not allowed to keep invested in listed entities. That will be a challenge for them to have continuing 80% with them in a listed entity. In all such cases, IPO would not come then. SME IPO had to be cancelled in such cases. So this is the only challenge I feel.
Okay, that we will write to this.
Yeah.
Okay, next.
I think in those cases, IGP can be utilized, innovators growth
IGP,
platform. That can,
IGP.
yeah.
That is very small right now. There is
It is,
no
I
traction there.
agree.
So main board, there's no such restriction for 100% OFS can also come. But Ankur, this
main board has a restriction on OFS. 100% OFS can come, but investors or selling shareholders cannot offload their entire holding. So there is a restriction. They can only offload based on their holding. There are certain thresholds up to which only they can dilute. So they also remain, they have to continue with the company post listing also.
Okay. Thank you. Welcome, Lokesh. I already informed that you had a meeting.
Yes, so really sorry for that. Some urgent meeting has come.
Yeah. Lokesh, so what we are doing, we are just discussing the existing provision, proposal, rationale, and what is the main board things. And one by one, if you have any comment on this, the offer for sale, you please tell us, because Manoj has raised only one issue, that the VC which has invested money for the listing purpose, they will come under this trap and they can't dilute. Any other point you think which are there?
So we have also seen the data, sir. The whole idea of SME, if you see 2008, when SEBI has issued a press release, the idea was to raise the money for a small SME companies. The idea was not for OFS. And of late, we are seeing that there are many instances, and what Manoj is saying, we have not seen any case where VC is there, because the whole idea is that these companies need money for expansion. If promoter themselves dilute and they go away, then it will be a big problem, because we have seen some data where promoter over a period of time dilution has been done, and the company become, because these are not professional companies, they are just promoter driven company.
Okay. So Ruchika, next point.
Next is with respect to monitoring agency. So the monitoring agency, presently the existing provision in SME says that if the issue size is more than 100 crore, then the monitoring agency need to be appointed. The proposal is that if the issue size in SME would be more than 20 crore, then the monitoring agency should be appointed, and for certain specific object, which would include to fund the subsidiary or to repay loan borrowing partially or fully of the subsidiary company, investment in a joint venture or a subsidiary, or for an acquisition. So if these four are the objects, or if the issue size is more than 20 CR, then the proposal is to appoint monitoring agency as mandatorily provision in SME issues.
Okay. So Ankur, I think this suggestion is, in my opinion, is good. Any specific things which you come to in your knowledge, or I think Lokesh and Sachin, you can just tell what types, why this particular thing has come, and will not be a burden on the company for the compliance part of view.
So just to give you idea, the logic of behind bringing this regulation was that of late what happened that many SME companies, they are raising money and they are saying that they are investing in the subsidiary company, and the subsidiary investment as per ICDR, investment in subsidiary company either through a loan or equity. And where the subsidiary money capex is going on, either is capex or working capital. We have seen a lot of cases where the fund has been gone to subsidiary and then it's gone out to the promoter entity. We have filed a couple of cases to SEBI also in a couple of SME cases that we have seen. The whole idea of bringing monitor agency is that it's an investor money. Let's, wherever the ultimate use, where the money is going, investors should be aware of. In many cases, we have asked why you need an investment in subsidiary company. Why not capex in a own company? And just to give you data, since everyone is there, just to give you data, some 75 plus document has been written and withdrawal in last 7 months on NSE. The whole idea is that we have seen the discrepancy in the disclosures. We have seen that objects were not matching. Working capital suddenly till the FY24, whatever they have given disclosure, they were negative working capital, and suddenly they have given a positive working capital without detailed explanation. So that's the whole idea of bringing, because we have seen that major of the SME companies object is working capital, but they are not giving a proper justification.
Okay, Sachin, your experience.
So same experience. Adding one thing, when we are taking money and monitoring submission of monitoring report to the exchanges, so till the date of it is utilized for the particular object. But in case of investment subsidiary or working capital or acquisition, once we fund given to the purport objected, proposed object, we concluded it fund is invested. But what happened to the fund? We lent to subsidiary or joint venture. So ultimate use we don't know.
Okay.
On the date of listing, next day they transfer the fund.
Okay.
But ultimate use is not aware, so that we thought that case should be monitored.
Okay, Ankur, the stock exchange has given their point of view. So what SEBI has thought on this? Because you have mentioned the concept of SME is for the growth of that particular development, not the subsidiary and other thing, repayment of loan and other thing.
Sir,
So, yeah.
Transparency should be there. Investors should always know where the money which has been raised by the company has been put used to. So monitoring agency is one of the way where there will be a quarterly reporting of funds by the agency and how they have been put used to. As Location Sachin sir have said that in subsidiary there is a lack of transparency. So that fund which goes out, then it is very difficult to see where it has been put used to. So for those kind of objects, we have a view that it should be 100% monitored irrespective of the size of the issue. Whereas for other objects, there has been a threshold has been lowered. Earlier it was 100 crore. Now it has been lowered to 20 crores to appoint the monitoring agency.
Ankur, why can't SEBI can come out with this? Because you governed by ICDR and LODR. And when you are making any changes, then you have to see so many changes other places. Can you make a rationale that any SME IPO is there? Then this is money for their growth, not this way and that way. So I think that issue of transferring to to subsidiary, pay loan to others, will automatically go away. Like you are bringing out money that is for the growth of the
So
company.
we recognize some businesses may require this kind of structure because they operate through subsidiaries.
I will
So
give
because
example.
they have a business where they are needed to create certain subsidiaries, and every
They
project
can
they are
come to the stock exchange and ask their permission, and stock exchange can apply and will put the monitoring agency. Because every company monitoring is very difficult, but if you can put this restriction, that can be worked out. This is my point of view.
So, Pawan sir, I will say, because if we put on something, so there will be no ecosystem of the monitoring agency for the such small amount. So if it will be applicable, then the monitoring agency will also put up some ecosystem so that they can monitor. They will get sizable amount of companies. Otherwise, it will not be available to all for this thing.
Okay.
And second thing, certain companies like Ankur sir said, like infrastructure company, where they need to incorporate a SPV for the particular project. Power supply companies, they need to incorporate subsidiary company for the particular project. So we need we understand the need of the companies also.
Okay. Anjali, yeah.
Yeah, I see only one challenge in this. Otherwise, this is a very good concept. But there are only 7 rating agencies in the country right now, which can act as monitoring agencies. And every quarter, whatever IPO, right issue, funds have been raised by whatever mode. So they have to give this report. And quarterly basis, they are overburdened as well. So if we can have some sort of for this 20 crore IPO, if we can have some kind of a leeway or some via media, I think that will be helpful for the companies, because otherwise those 7 agencies serving 6,000 companies, 7,000 companies rather, may be little difficult.
So Anjali, just to give you the data, we have also done analysis. Whatever IPO that happened listed happened in last 1 or 2 years, around 50 or 60% of the money has gone in the working capital requirement. And usually what we see is that it's only a one-time certificate. If the object is only working capital requirement, it's a one-time certificate. You are not required to give again and again certificate. Some of the some of the 20% or 15%, it was repayment of loan. Again, it's a one-time of certificate. Only those cases where capex is there, and if you are exceeding 3 months and 6 months, then otherwise, if you see only one-time certificate, it will require if assuming that company is consuming, uses the money on the one-time basis.
In one quarter, in one go itself, right?
Okay. Next, Ruchka, this monitoring is.
Sir, for main board, it is there. Again, if the issue size is more than
Same 100 crore. Yeah. Okay. Next.
Next is, sir, with respect to lock-in of promoter shares. So existing provision says that the minimum promoter contribution, that is 20%, is to be locked in for 3 years, and in excess to 20% should be locked in for a period of 1 year post to listing. The proposal is to amend the 3 years period to 5 years, and for the balance holding, let's say if the promoter's holding is 70%, then 20% is to be locked in for 5 years. Rest 50%, out of that 50%, 25% is to be locked in for 2 years. That would be released post 2 years, and balance 25% would be released after 1 year of listing. So that is the proposal.
So Ankur, because this is linked with you have mentioned this object that here the company is a capital which is cool capital you require. You require a promoter real capital, not the come and sell and
Correct, sir. Sir, we don't want this platform to be used by some companies where they come list and promoters do a exit, and then only investors are left behind. So that because will definitely harm the entire ecosystem, and because of such few companies, there will be a negative view on the entire platform. So for this, we want promoters who are oriented with the company's growth, and then they have a long-term view and want to stay with the company. We have increased their association with the company through this lock-in.
Okay, so it means if the company promoter has 75% equity, So 20% is for 5 years. And out of the remaining 55, 27.5% after 1 year and remaining 27.5 after 2 years.
Yes, sir.
Okay.
Ankur, just one clarification. What about other than promoter categorized persons?
Same, that
It
is
will be
the
same. So
existing
you are
will
the
remain.
promoter other than MPC. You are saying everyone is similar, right? So same
Yes.
restriction would be applicable to all.
No, sir. The regulation, there are two different regulation: lock-in for promoters and lock-in for
Other than promoter.
non-promoters.
Other than promoter. Yeah.
So this 50% for 1 year and 2 year is only for promoters holding in excess of MPC.
Okay.
For promoters, there is no change.
And promoter group?
Promoter and promoter group is one class.
Promoter,
Same.
And what if the company migrate to main board after 3 years? This lock-in period will
Yeah.
continue. 5-year lock-in period.
okay, if after
Because-
3 years it migrate.
After 3 years, if it migrate to main board
So,
and
sir,
SEBI board, then
I think they should continue with this lock-in because post-migration, there will be only 2 years left for this MPC part. Remaining part is anyways before migration, they will be free. And it will be good because company, when it is migrating from SME platform to main board platform, promoters it should not be that once a company migrates and then promoters entirely exit. So
it's not about exit, sir. Only concern is lock-in shares cannot be placed to raise fund required by the company. In most of the cases, listed companies shares are asked for place by bankers and lenders. So lock-in shares are not eligible for that. That is the concern only.
Okay. So Manoj, 55, I gave you example, 55% shares will be free when you will go migrate. Only this 20% shares will be lock-in, which is 5 years. So, Ankur, can we do something for this? Because when company is going to migrate and then more checks and balance and stock exchange is also putting. So some leeway we can give here.
Lock-in, sir, only concern with respect to lock-in. I think this is a good proposal and skin of the in the game is necessary. But only thing is some provision can be made for pledging the share to the bankers. If that is possible, then it will be a big help to many of the SMEs.
sir, we can review such proposals because on time to time basis, SEBI is always doing some exercise to identify the items which are for ease of doing business.
Okay.
So we can have a look based on our experience.
Okay, Sachin, any point on this?
No, I'm okay, and nothing else to add here.
Okay, Lokesh?
Idea of putting this regulation was that we have seen some data where SME, at the time of listing, the promoter holding was 75. In down the line 2 years, the promoter holding come to 10 or 20%. And since they are not a professional driven, this is a promoter driven company.
Yes.
A lot of things have happened. So that's the whole idea of bringing this.
Right, that is very nice. Very
Right.
important thing. Only exception I wanted relating to pledging the share for banks and financial
Anjali,
institutions.
you want to say something?
I think in the discussion paper, the language is not coming out clear. Upon migration to the main board, such lock-in may be again made applicable to such companies. Probably the language in the final draft would be fine-tuned, but I just thought, let me point it out.
And that was with respect to, I think, what Manoj sir has said, because it is a 5-year lock-in that will continue. That was
It will
the.
continue. I think that is what.
But we can
Yeah.
have this sorted out in our regulation drafting.
Yeah.
Okay, friends, we have 27 points and we have reached to 9 points. No doubt, these are a very important thing. So remaining, if there is no additional point, you can just ignore. Okay. So now I will be little fast because we have 40 minutes to go. Here, minimum promoter contribution lock-in is 18 months and excess holding lock-in for 6 months. So here there's a easy route than the SME. But what skin in the game is very important point. Okay, Ruchika, next.
Next, sir, with respect to general corporate purpose as an object for the issue size. So presently, the threshold is that GCP can be only up to 25% of the issue size, and GCP plus unidentified acquisition total in aggregate can be maximum up to 35%. Now the proposal is to restrict the GCP in SME issues to 10% of the issue size or 10 crore, whichever is lower. And the unidentified targets or acquisition provision would be deleted. That is the proposal.
Okay. So I think the Ankur has made this. So Lokesh, what types of problem you have faced in these types of regulation?
There are a couple of things. One is that GCB 25%. The only two currently we are getting two objects: working capital and GCB.
Okay.
When we ask where is the money gone, it's in GCB. No one know.
Okay.
The whole idea is that it's the investor money. It has to come into a public domain. That's why put a restriction on that. You bring the object, whatever object is there, you put it. Second thing, unidentified acquisition. 5 crore, 2 crore have been kept for unidentified acquisition. Sometimes post listing, what type of acquisition they are going to do. Also, the disclosures are there, but no guarantees are there. So to remove all these things, you identify the company, you do acquisition, and then you come for.
Okay, Lokesh or Sachin.
So same thing. Earlier when SME was coming, the size was very small. So this 25% can be thinkable. Now SME issue is coming 50 crore, 70 crore, 100 crore, 200 crore. Now it is coming. So amount of GCP is sizable, around 25 crore, 30 crore, 40 crore, which is no monitoring of that amount. Second thing, the company which is coming for the IPO is only a growth company for the growth. Now they want to acquire another company which is not known to the investor, and whether the acquisition will be with the related party or not related party, we don't know, because money raised and then it will go. There is no control. So that's why we should put some monitoring. And if yes, you want to acquire something after IPO, there is a further public issue option is there.
Okay. Ankur, any additional point you want to say?
No, sir.
Okay. So Ruchika, so what is the main board IPO?
Sir, in main board, the
same 25, 35. So that is there. Okay, next.
Next are certain changes in eligibility conditions. First is with respect to promoter group eligibility test. So presently under Regulation 228, the word promoter group is not mentioned. The promoter or director or the issuer should not be debarred from assessing capital market, or should not be willful defaulter, fraudulent borrower, or fugitive economic offender. Now the proposal is to include promoter groups category persons also into this regulation. So that is the proposal.
Ankur, what is the background of this? Because this particular issue will create lots of point and lots of confusion. Yeah, please tell.
Sir, we have seen these companies are mostly like family-owned companies. So we want that we see that entire promoter group is closely responsible for entire operations of the company or handling of the company. So the restrictions which are there on promoter should also be there for the promoter group. So that such companies where the promoter group members are debarred from the market or are willful defaulter or fraudulent borrower, or there is any action by the government and they have been declared fugitive economic offender, such company should not come for fundraising. That's the whole question.
Okay, but Manoj,
I think, sir, though objective rationale is okay, but the issue is the definition of promoter group is quite wide. It includes in-laws, it includes certain persons who have, let's say, family division is there, so separation has already happened. For all such cases, if such company want to come out with the issue, there will be a problem. So there may be one brother or one maybe father is also shareholder and promoter, part of the promoter group was his brother has made some default, or his in-laws have made some certain defaults, which all fall under the promoter group. It may be so in such cases it will be difficult to come out with the issue, and that will be a problem for many of the cases. So
other than this eligibility provisions, there are also many places which are also applicable for main board IPOs. where the promoter group debarment is one of the eligibility conditions. There are disclosure requirements of promoter group members and other certain things. So we have seen where there is a total separation between the promoter and promoter group entities. They come for an exemption application, and based on the merit, those exemption applications
Exemptions are granted, right.
evaluated and the exemptions are granted. If two brothers are not having any involvement in each other's company, or they are not having any shareholding or position, or there is a separation agreement or some court order between husband and wife, they are divorced, then such things are taken considered, and suitable exemption is granted on merit.
Because me and Manoj were discussing about this issue. Suppose this condition is there, then Reliance cannot bring out the issue because they.
So they have formal separation and they will seek exemption, but only
Yes,
thing is this process would lengthen the timeline. That is the only concern. Otherwise, obviously, if they have justified reason, they can go and ask exemption, because this exemption is granted by SEBI only, not the stock exchanges.
Yes.
So, any like today, what is happening? Like father has done something, some wrong, and now the family, the son, they want to bring out their or setting up their business. So they can come to for exemption, and they show that.
Yes, sir. Yes, sir.
Okay. Okay.
Because in-laws sometimes includes co-brother-in-law, brother-in-law. All those people would get covered.
Then you don't have control.
So that it is difficult for many business families to have control or access to all those persons and their track record. That may be a big challenge for even merchant bankers to do the scrutiny of all those persons.
Okay.
So just to give you an example, when any company which comes for public issue or rights issue from this Aditya Birla group, there are a lot of exemptions with respect to their entire group because the group is so large.
Right.
But then such exemptions are granted based on the documents submitted and the other material on record and based on the merit. So there is a process. So as Manoj sir has said, the process is there. So definitely it will take some time, but it is not a showstopper.
Okay. Okay.
It will also make the provision life tougher for merchant bankers to do the diligence for all those persons. That is one concern from merchant banker side.
So, Ankur, can we give this that promoter group because brother-in-law, co-brother-in-law, so many people are there. So sometimes there is a confusion on this. So we can specifically mention that who all are covered and make it a limited list.
No, sir, the definition is there, and it is.
The definition, it's quite clear. Yeah.
So, like, it is synchronized with Companies Act, and that definition of promoter group is same.
Lokesh, any point in this?
I think Ankur and Manoj has covered. Only thing is that we have seen the cases where father was running the company. Once they identify that they've done some default, the promoter has been kept, sister or daughter has been kept as a promoter, and father become the promoter group. Those type of cases, the whole idea of that SME is between family-driven companies.
Okay. Okay. Okay.
Object is fine. I think rationale is very, very much correct. And
Ruchika, next.
Next is with respect to track record of LLPs and firms. So in the existing provision, if there is any LLP partnership firm or any any partnership firm LLP and or there is any merger between the companies, then the track record of the partnership firm LLP is considered for the calculation of that eligibility condition of track record of SME issues. Only condition is that the financial statement is to be prepared as per the provision of Companies Act and gap is to be followed. Those conditions are there. But now the proposal is to that when the partnership firm or LLP is getting converted into company, those companies should be in existence for 2 full financial years before filing of DRHP. Along with the restated financials should be there as per the provision of Companies Act. That is the first proposal with respect to the conversion cases. The other is a 2-year cooling off period is proposed if there is a change in promoters or new promoters acquire more than 50% or more then again the 2 years cooling period should be there before filing the DRHP. So these are the two proposals.
Okay.
Yeah.
So Ankur, now what is the background of this? Because this is one issue where I think maximum holla is going on. And
Sir, Exchange have lot of real-time instances to give background. The suggestion has come from them. So this promoter changing or a company acquiring some other partnerships, converting into LLP, where the current company and the current promoters have not ensured that they are in the control, and they immediately come for a listing. So for that, it has been kept that at least there is a 2-year cooling off period, so that one, the company stabilizes. Second, if there is some intention of doing any manipulative or fraudulent activity, that is not there, and the 2-year cooling off period takes care of this, and the company's financials for these 2 years are then put into DRHP. So people will be able to see what this company was doing for 2 years, because the financials will be of the company and not for some other entities which have been merged or then have been acquired.
okay, location, Sachin, the ball is in your court because you have suggested. So can you give some example? What are the problem you are facing?
सबसे बड़ा प्रॉब्लम यही है कि कंपनी LLPA से सीधा come for listing. The company is not aware of how to do compliances of MCA and exchanges. Whenever there is non-compliance, company said that we don't have the past experience, give us a one-time exemption. The data is not there on ROC. The whole idea was that all the information should be there and company should be comply with the ROC compliances. Let them be familiar with all the compliances required regulation, because many cases we are seeing that the company are non-compliant. They said that they were not aware of, the promoter were not aware of. I think promoters are not required to be aware of. There is a secretarial team should be doing that. But the thing is that promoter should also understand that compliance is also one of the most important critical part. That's the whole idea.
Okay, Sachin.
Adding to Lokesh, so a proprietorship firm, partnership firm, or proprietorship is not regulated. Partnership firm is minimum regulated, and LLP is slightly regulated. Okay, but if we see, it is totally a proprietor concern. So to get some maturity to come on the public forum, there should be a time gap so that they can mature. If you see after listing, there are many cases of the fines, and they are coming that please waive the fine. We don't have any experience about this thing. And for the small companies, fine is going into crores of rupees, lakhs and crores of rupees. So some maturity of the regulatory provisions, regulatory experience is required.
Okay. So Manoj, Anjali, koi point?
I think second part proposal is totally fine. The change in promoter, if there is a change, then obviously there should be skin in the game. The first part may be a bit problem because many of the companies are working in the LLPS structure. Businesses are working in LLPS structure, and if it is restated to be similar to the IP public this Companies Act, company law requirement, that there is, I think this is a sufficient safeguard provided there. So it may not be such restriction, because LLPs are also regulated by MCA, their filings are also there. So maybe there may be two different class. One is partnership, unregistered partnership, or registered partnership, and other separate for LLPs.
Here I want to make one suggestion. I should make earlier, but we should define what is change in promoter, because adding single promoter or due to change in definition, you should not consider it is a promoter's change.
Yeah, so that also need to be considered. Who is promoter? Because in case of unlisted company, there is no hard and fast rule related to disclosure of promoter.
Definition of promoter is given. Definition promoter is given, but what constitutes the change in the promoter? Single change or all, we should define.
I think we mean the entire promoters have changed.
Yes, so we should be clarified.
100%. Or there is a new old promoters are there, and there is a new promoter who is holding more than 50%.
Okay.
But Ankur, if the old promoter is also continuing, see, why I'm saying this, we had a company, that was at a discussion stage only. I asked a few things about what happened 4 years down the line, 4 years back, they were not able to tell me anything. कि वो पुराना promoter देख रहा था. So then they brought in somebody who was from the old management as well. So if somebody is continuing from the old team or old promoter group, I think that should suffice. Basic purpose is that somebody who's aware of the entire background of the company.
So yes, if the new promoters are less than 50%, so that 50% is quite a bigger number
Right.
for acquisition. If new promoters are 50%, then only we are saying. If the new promoters or new have come with less than 50%, then this 2-year cooling off period is not required because the old promoters are sufficient to handle and get along with the company.
I believe merger part is not covered, right? If the company is getting merged into another company and then IPO comes, so that restriction, these are two propositions, but not related to the merger.
Through a scheme provisions are
If it
already
is approved by
there and the
NCLT, then it
benefit
is
of scheme
okay.
is given. Yeah.
Okay.
Because it's already a company, but Lokesh has said, because if it is already a company, it is been through the MCA compliances and
Yes.
it has some overview of regulatory provisions. It is only for the entities which are non-regulated.
Right.
So in this proposal, there is a one point is LLP should be excluded then to partnership, and this change in promoter group definition should be clearly mentioned. Okay. So, okay. Now I have to be little fast. Ruchika, next point is 10 crore rupees. I think this is well taken because minimum.
Yeah, that's fine. I think no discussion required is very good.
Yeah, that's fine. Next. Yeah, next point.
Yes, sir. Next is with respect.
This is a problematic thing. Ankur, what is the logic of this operating profit 2 years to 3 crore and this?
So, sir, currently SEBI provisions don't have any such criteria, but both the exchanges have a criteria of positive net worth, positive operating profit, and NSE also has a criteria of free cash flows.
Free cash flow, yes.
So, gone through what exchanges are having, and both exchanges have like different it is this intent is same, but the requirements are different. So we thought that it will be good if regulations cover some eligibility item on these lines.
Okay.
So based on that, we have made this proposal. So we have received comments. The 3 crore profit for 2 out of 3 years was thought that it will be ensuring that companies which are doing good are only coming to the markets. That's the background.
Sachin, I think this suggestion is well taken. You want good companies which should be profit making. Okay. Yeah. Any point? The Lokesh?
I think Ankur has covered it.
Okay. Yeah. Next point. Ruchika, next.
Next is with respect to face value. So presently there is no restriction. Face value can be any 2, 5 or 10. But now the proposal is to restrict it to 10 rupees only.
This point is well taken. I have just one question. Do you think that 10 rupees face value is there, but later on I can convert it to 2 rupees or 5 rupees?
So, sir, presently we are not proposing any restriction with respect to split of shares post listing.
Okay.
And it is also not made applicable for companies which are already listed. It is only at the time of IPO, because we don't want companies doing a split before IPO and then making their shareholding higher and then coming up with the very high premium. So that is the intention.
Okay, but one suggestion which we want to give, because we have seen so many companies are doing their issue price is the market price is 30 rupees, 40 rupees, and they do a split. Okay, and then they bring out bonus. So I think split and bonus should have some correlation with this, because you cannot do a split if the price is at least, because now 10 rupees is there. So you can make it that if the price is less than 50 rupees, you can't do split. And if your net worth is not more than this, then you can't do, if less than this, you can't do bonus issue also, because this is a two manipulation which is going on in the market. This we can just take it. Okay.
Yes.
Yeah, Lokesh.
But just to add, ICDR 2018, there was already a provision in the main board earlier, where if your issue price is less than 500 crore, the face value should be minimum 10 rupees, and after that, it can be thing. The whole idea of that SMB, there are some stocks, the price are 60 rupees, some stock, the price are 120. People don't go on the face value, then it's create a confusion. We have seen a cases like a 2 rupees share is quoting at 370 rupees, a 10 rupees is quoting at 4,000 rupees.
So that's why I was giving long back, I have given a suggestion, Ankur, that whenever the company's ticker is going on, before this you write 2 or 1. So like suppose there's a company.
It is coming, sir.
Huh?
If you see on the
That is
ticker,
also coming, yes. In the suggestion, there is a
there
face
will
value
be a
capital.
superscript, and with the name of the company, there is a number 1, 2, 5, 10.
Yeah.
And then there is a price. So that number represents the face value.
Yeah. So post
And Pawan
split,
sir, for corporate taxes like bonus and split, the separate proposal is there in the proposal.
okay. Nushka, next.
Next is certain proposals with respect to migration to migration of SME companies to main board. Sorry.
Nushka, now we can't reach because time is only 50 minutes and we have more points. So I'm coming directly,
This
Ankur.
is a relaxation. So I think nobody should have. This is companies. This is based on the request from the companies.
From
We
the
have
companies, I
many
guess.
requests.
Now
This
you are allowing to go beyond 25 crore only subject to that quarterly result disclosure and governance norms to be followed. Yes.
So it is the request
That's
of
a
the
good
company.
thing, I think.
This is a good move. This is a good move.
Yeah, next.
Next is with respect to repayment of loan of promoters. This is new provision. This would be debarred in SME issues.
Okay. So anything which you are just bringing out issue, location, Sachin, how many companies has come like this?
On NSE, we have 15 to 20% where the repayment of loan is there, out of which, out of 15%, what I'm talking about, Mota 5 to 7% would be the repayment of promoter loan. Or we have seen unsecured loan, no agreement, nothing on the paper, they have done it. It's become a challenge for investors.
Okay.
Agreed. And where it was utilized, whether it is siphoned off or not siphoned off, it is very, very difficult to get information about that loan.
So very clear, Ankur has mentioned that this is for the skin in the game should be there. It is not that you just bring out issue for not the growth of the company, but growth of the only promoter side. Yeah, this is a good suggestion. This point. Next.
Next is with respect to working capital as an object. So if the working capital amount is more than 5 CR, then a statutory auditor certificate endorsing.
I think this is well taken. I think this is only.
Yes, it is a trust money. You are the trustee of public money. So those disclosures are well taken. I think
Next.
this is a problem.
In case anybody wants to add something on special point on where I'm just rushing, you can just raise your hand. Yeah.
So again, this is with respect to disclosure. This is just with respect to disclosure.
Sanction.
Yeah, so we can, I think, skip this. No.
Okay.
Next is additional disclosure that is there in Schedule 6, but generally SME companies write that they do not have any senior level employees and they don't disclose. So now this is becoming mandatory.
Ankur, what is the logic of this? Because this is very interesting point and very important because too many companies do.
We have seen that in main board, there is a lot of detail about the companies. Companies maintain a website, the entire structure of the company, hierarchy of the company, their promoters, directors, KNPs, all details are there. But for smaller companies, we see there is no proper website where company can go. And since these companies are smaller, the investor should have an idea that how many employees it are having, for how many employees the company is depositing money for EPF, and what was the site visit report of the merchant bankers. So this will give a perspective to the investors before investing that what kind of company they are investing in. So it's for the transparency.
Okay, location, Sachin, what problems you have faced in this type of thing?
No, there is no problem. We just want the transparency and disclosure of the person who is actually taking care of the operations of the company.
Then you
Whether
have Ankur, then you have to put tax paid also, because tax paid is also one aspect which can indicate the company's correct position. Whatever size is there, if their tax paid amount is there, then you can't find any jugglery in the accounts.
Sir, that financial amount, I think, notes to financials में कहीं आ जाएगा financial
That
statements.
comes.
Okay, okay, okay. Next.
Ankur, sir, just 1 minute. Ankur, tell me one thing. Many of the companies say we have contractual employees. That data doesn't even come in ESIC and EPF.
So at least to start with, this is what company will give, because it's data which can be cross-checked by the merchant banker.
Right.
So we don't want to put those details which will be difficult for the merchant bankers, because there will be no proper documentation. So to start with, we have this data which can be easily verified by the merchant banker and then disclosed.
Anjali, in business section, the company do disclose about the human resource, whatever
Right.
number of employees and contract employees, but no further details required.
Okay.
Yeah.
Okay. Next.
Next is with respect to disclosure of merchant banker fees.
Why this required, Ankur? We are interested party, but we are asking these questions.
Sir, again for the investors, transparency. So, sir, we believe if the merchant banker fees is a substantial portion of the issue size, then investors should question, because they should see the pattern. What is the industry requirement? If all issues, the fees is in the range of X percentage, but for this certain issue, it is 2X or 3X. It should be a red flag for the investor, that why in this issue the fees is 3X, 4X.
So Sachin and Lokesh, it means that 30 to 40% issue size price fees is charged by the merchant banker.
So if
will
you
be
see,
not
you have
all,
to see
sir.
about the size of the issue. If issue size is very small, 5 crore, 10 crore, I mean now we are proposing minimum 10 crore and 15 crore, this is going very high. And whatever money the company is raising for the growth is not actually going in the growth. Investor thinking is that money is going in the growth. So major portion is going to the investor, merchant banker fees and other expenses.
So why we can't restrict the fees also, that this much is the, say, 10% or 8%, 12%?
Sir, SEBI never intervenes on the business decision and these parts. So any of our regulation do not dictate on business aspect. So we just want that investors should take a call.
Yes.
Okay.
Take an informed decision.
Informed call. Yes. Informed
Okay,
decision.
Ruchika, next. These are the small suggestions. Ruchika, just 21 days.
DRHP is to be hosted for public comments as it is there in main board. So this is one of the suggestions.
And this is also in the main board. So this is okay. Next.
Next is a conversion of outstanding securities. This is there in main mode that you have to convert all your outstanding securities into equity before listing, before filing RHP. So that clarity was not there. It is provided now in SME.
Just a clarificatory thing. Yes.
Okay, next.
Next is a DD certificate by merchant banker is to be now required at the stage of DRHP rather than RHP or prospectus, which was there in the law earlier.
Similar provision in main board, so they have done.
So one more addition, this DD certificate is required to submit it currently to SEBI. Now it will come to the exchange.
Okay.
Okay. Okay. Next.
Next is certain nomenclature uniformity. We can skip this. Next is with respect to exit.
Ruchika, just one addition to this. Ankur, I suggest that if we can, denomination can also be made uniform, because some companies use lakhs, some crores, and some full amounts. That also becomes little difficult for the poor investor to understand what exactly is the exact
Correct.
status.
I believe there is some communication to AIB in this regard, though we have not put in regulation, because we have in main board received certain requests that millions is preferred by the foreign investors. So we have not put, but we SEBI want it to be in lakhs, so there was some discussion. But again, it is an industry demand that millions should be allowed.
Yeah, because millions should be allowed.
There should be consistency across document. It should be consistent, but then millions or lakhs.
Okay.
But I should 1,000 should not be allowed. Because we
1,000
have
should
seen many
not.
documents in thousands. Yeah,
Right.
we have seen many documents in thousands.
Actually, you should allow only crores, because if crore, say 36 lakh, so I will write 0.36 crore. Okay, so it will be a clear picture to.
I think lakh is good, sir, because for SME there may be many things which are in thousands.
Yeah.
So there will be
Okay.
001. I think.
Next is exit opportunity for dissenting shareholders. So if post listing there are certain changes or variations in the object for which
So
the
they
SME
have made it equal to the main board.
Yes, this is a Companies Act requirement.
It is a Companies Act requirement, so it is just a restatement. Otherwise,
yes.
as soon as you are listed, you had to comply with this law.
Yes.
Sir, I am, Ruchika, one second. I am of a very strong view that stock exchanges approval should also be needed for this, because otherwise taking a shareholder's approval is not that difficult a task. Exchange ka permission should be there that you want to change the objects of the issue.
Ease of doing business, Anjali.
Sir, that is okay. That is okay. But then
In principle
the
approval from stock exchange, maybe they can.
Yes, you
No,
took the money
Stock exchange doesn't. Stock exchange do not want to be the monitoring agency here.
We are here to promote ease of doing business, not put the condition. Okay, next.
Next suggestion is with respect to promoters' contribution, minimum promoter contribution. So if there are certain split or bonuses done in the company, then the adjustment of price on the basis of those corporate action is to be done while determining what security is eligible for minimum promoter contribution. So that is the proposal.
That is a clarification of
Clarification, yes, sir. Only a clarification. This is the way how they do.
Yeah.
Exactly. So I think these are the changes in ICDR. Now there are 3 proposals for LODR. Anjali ma'am would take it ahead.
So as we all know, for SME companies, few of the provisions of listing regulations were not applicable. So any of the corporate governance provisions were not applicable, related party provisions were not applicable, but now it is proposed, as I said earlier as well, there are no more small companies. They are coming within the arena of big companies. So it has been decided, it is proposed related party provisions as contained in the LODR regulations will be applicable on the even on the SME companies. The only thing, the relaxation that is provided herein, that the limit will not be on the basis of 10% of annual consolidated turnover or 1,000 crore. It will be only 10% of the annual consolidated turnover. I think we can take up all the 3 and then the discussion can happen. Likewise, for Regulation 27, the requirement of submission of quarterly report is proposed to be extended to SME companies as well. For main boards, it is already there. And shareholding pattern and statement of deviation from financial results. Presently, it's on a half-yearly basis. And the way fundraising is happening and shareholding structures are there. So it is proposed to align it with the main board requirements and to be submitted on a quarterly basis. I think all the 3 requirements are the need of the hour. Yeah.
Ankur, the rationale, then location, Sachin can tell what people are doing. What problem they are facing. Yeah, Ankur.
So, sir, one thing in this, we are making this applicable for SMEs companies where the paid up capital exceeds 10 crores or the net worth exceeds 25 crores. Because in main board also there is some relaxation for smaller companies.
Right.
So those thresholds, if they are not breached by the SMEs companies, these provisions will not be, RPT provisions will not be applicable. But as Anjali ma'am has said, now the companies are growing. We want this corporate governance provision because this will not only protect the investors, it will also help the companies. So once they are of the significant size, they should follow the best practices and best corporate governance, because otherwise there are chances of some wrong conduct by any promoter or involved parties, which will eventually harm the company only and the entire shareholders.
Okay. Lokesh?
The whole idea of this that already companies complying with the MCA requirement, wherever the minimum directors and independent director, they are already having, the audit committee is already there. It's just that the additional compliances of LODR, whatever the additional requirement, they are not following. So compliances they are anyway following. It's just that additional one. And the idea is that now being SME company, market cap has been increased, more fundraising is happening. 100 crore companies and 200 crore companies are coming on SME, which earlier it was not coming. That's the whole idea of bringing here.
Okay. Sachin?
So when your size is increased, so the new investor investing to their company on daily basis should know the latest information. It should not be a 6-month-old information. This is the thought process behind suggesting this provision.
Okay. Do you think, Ankur, are you planning to restrict the issue size also, like more than 200 or 300 crore rupees should be in SME, not more than this? Unmute you, please unmute.
Sir, some part is already covered with respect to, now we have made this face value of 10. Along with that, on an SME, a company can come only if it is not having paid up capital beyond 25 crores. So if they are charging high premium, then they should be deserving. Otherwise, they will not be able to charge that premium. So it will be the market structure which will ensure that what size of company can come.
Okay. So friends, we have covered all the points. Now, few questions are there. Quickly, I'm just reading out. Somebody is suggesting even 200 is small. It should be 1000. That is suggestion. Now, he's asking acquisition can be disclosed in DRHP and later on acquired after receiving IPO money. So somebody is saying, I want to acquire this company. Is it allowed?
It is permitted, sir. It is permitted. It is only for, you cannot say that I will acquire and I don't know what I want to acquire. But if you disclose the details and agreements that I am acquiring XYZ company, I have this agreement of future and for this price, and for this I am raising money, then it is permitted.
Okay. Now, a reverse question. Also, acquisition is a confidential thing. How can we disclose the name of in DRHP? If we can provide this detail only to stock exchange, as this is a confidential in nature.
Sir, for a listed company, nothing can be confidential, sir.
Okay.
Once a company is coming for listing,
Okay.
they anyways have to disclose everything.
Okay.
I
So
think
that
the question which is coming is at the time of DRHP and final listing, there is a gap. So there may be 3-4 months gap between the company filing the DRHP and final issue is coming. So for those period, I think disclosing the name of the target company may be a challenge in some cases. There will be confidentiality agreement. So can it be that at the time of RHP name is disclosed and till that time it is not disclosed, something like that, and name is given with all the agreement etc. to the stock exchange for their vetting? For along with merchant bankers,
giving additional responsibility on exchanges to verify that whatever the acquisition they are doing agreement review. Second thing, if they are doing to do acquire in 4 months, let's do agreement and then it come.
No, 4 months is sometimes diligence is done, agreement is signed, definitive agreement is signed. Then
that's why initial part of PPT I told you that we have asked 75 document to be written and withdrawal. Let's talk about it. Every 4 document, out of every 4 document, 1 document is returning.
I know. I was just reiterating the contention of this person who is talking. So yeah.
Now, the material document for inspection are not available on the website of manager of the issuer or issuer company. These documents must also be available in public domain.
I think this is fine.
So this is the requirement even presently. So merchant bankers as well as the companies have to upload all the material documents on their sites.
No, it's not on upload. They have kept on a register office.
Registered,
They are kept on the
that
register
is
office.
also there. Yeah, that is also there. Plus, they are to be uploaded as well.
No, for main board SME IPO, there is no such requirement.
Okay.
No, sir, it should be for SME IPO also, because the Schedule 6, the requirement comes from the Schedule 6 of ICDR, and it is equally applicable on both SME and main board. And the Schedule 6 says that material document at the time of
Are available for
RHP
inspection.
are made to be available at the locations and the office and the websites.
Okay. Okay. Please share the copy of presentation. We'll send presentation copy to all participants. One last question. Till the acquisition is done, it should remain confidential.
It is the same question, I think. Repetition.
Yeah. Oh, okay. So friends, so we have asked the regulator what is the behind, why they brought out this. We have asked the instigator that why you have proposed this, and they have given the logical answer. We have discussed with the merchant bankers and the market participant that how these things will affect and what are the things. So all 27 points which they have come out, one by one we have discussed and we have come out. Now what we'll do, we will compile all the points, all the suggestion with some example and with some rationale, like Manoj has raised an issue relating to the taking over company and the LLP company and some other thing. We will give it to you, and with the logic that these are the good suggestions, these are the change. Now we have done the poll, so I will request Shivam just show all the polls results. So first is, should minimum capital IPO should be increased. 51% is saying, 51 and 6. So they are saying yes, increase. So 2 lakh, everybody is agreeing. 4 lakh only 6%. No, keep it 1 lakh 38%. So 51% is approved. This is 2 lakhs. Next. Do you agree with the changing the allocation methodology in NIA categories? 96% say yes, because they are not getting shares. So that's why they want to get this.
Yes, lottery is always.
Yeah. And Ankur, the poll we also add in our presentation. Which
Okay, that will be helpful, sir.
And next, do you agree with the proposal to increase minimum number of allotee in SME 200 to 5? 94% are agreeing. Next. Do you agree with the proposal of restrict OFS in SME IPO 20% issue size? 82% are saying yes. And these are the questions which you have pointed out in same questions we have put in there. Okay, 82% saying yes. Next. Do you agree with the proposal to make appointment of monitoring agency? 84% saying yes. Next. Do you agree with the proposal to release the lock-in of promoter holding in excess of the minimum shareholding? 84 yes. Do you agree with the proposal that they add promoter group in regulation 228C and the 70%? So here the percentage of 30% is there where people are not agreeing on this. So there is some logic on this. Next. Do you agree with the proposal of impose 2 years cooling period before LLP SME company conversion? Though Manoj's view and other views are different, but 78% saying yes. The EBITDA point 3 to 3 crore and 2 out of 3 financial year, it is also agreeing. Next. Do you agree with proposal SME issue may not be permitted where object of the issue or repayment of loan? The 97% are saying yes, it should not. Do you agree with the proposal of EPS, EF that should be disclosed? 84%. Do you agree with the proposal that explanation may be provided with the price per share for determining security eligible for MPC shall be adjusted in corporate? Yeah, that is a welcome change. Yeah, next. Do you agree with the proposal that SME-listed entity should be required to submit shareholding pattern statement of deviation, variation, financial on quarterly basis? 84% saying yes. So, SEBI's all points and stock exchange all agreeing Okay.
Pawanji, if you can provide the number of votes casted for this thing, it will help how many persons has considered this.
Yeah, we will share. Okay. So that we'll do. So friends, thank you very much. As a ritual, I just want to give 30 seconds to everyone to just conclude this. First, I will start with Shivanshu. You want to say?
Sir, yes, sir. I think SEBI has done instrumental and has been very active in bringing out the new reforms. And I really appreciate how the industry is evolving. And most of the market participants I have interacted with are happy with the new regulations. So kudos to market regulators, merchant bankers, and everyone involved in the ecosystem.
Okay, Anushka.
Sir, one bad apple spoils the whole barrel. So I think there are certain bad players who are coming in SME because of which exchanges and SEBI is facing a lot of issues. So I think all the suggestions are very welcoming, but it should not be that much stricter so that we might not able to see SME in future. So that thing should be considered while implementing the changes.
Manoj.
I think most of the proposals are quite important and fact of the reality. It is near to the reality, and hence it is required. Like increasing the size of issue, number of participants, etc., are very welcome move. And I think slowly everyone will be accustomed to this. Only clarification which were required was relating to the trading lot, which could have killed the liquidity. So that I have already discussed, and they are saying it is not in the proposal right now. So that's a good thing, I think.
Anjali?
I totally agree with my co-panelists. Welcome changes. All the changes were almost the need of the hour. One thing, as SMEs, the companies have to realize SMEs are the pillar of the Indian economy presently. And we have to make sure that even in compliances, we become the pillar of the compliance structure. That's it.
Okay. Sachin?
So while dealing with the documents and all these things, we come across various things and various thoughts for the improvement, but it should not be, you said that it should not be draconian. So we thought, our management thought we'll discuss with the other exchange also, and whatever best practices we can put to regulate the SME market as well as to stop the manipulation. We propose this changes.
Okay.
And from your poll, we can consider that all are well taken by the fraternity.
Right.
Okay. Lokesh?
I think a lot of effort has been done while drafting these things. So, while drafting, it's a regulator, exchange, and SEBI and merchant banker are there. Since your participants are there, where some companies are there, if you face any challenges, just give suggestion. I think December 4th or December 7th is the last date. Just give your suggestion. That will help.
Okay. Ankur, before coming to you, there is a market, people are saying by implementing all these things, the SME market will, the way it is flourishing and so many issues are coming and investment is going on, it will dry away. So when you give closing remark, please address this also.
So, sir, we always believe that to ensure a healthy capital formation, it is important that the companies which are coming for listing, such companies and their promoters should be ready to share the benefits with other shareholders and at the same time uphold the rights of all shareholders. So with this more disclosures and more checks and balances on the promoters and the company, definitely this will help in a healthy capital formation, and this will be overall good for the entire market infrastructure and the market universe for these smaller companies, because the credibility will increase, and automatically once the credibility is there, investor will definitely interested to participate, and there can be a initial knee-jerk on some of the issues because companies will struggle, but ultimately when the good companies will come, then the market will flourish.
Okay. Okay, thank you very much. Thank you very much, Ankur. Thank you very much, Lokesh and Sachin, Anjali, Manoj, Ruchika, and Shivanshu, and all participants, those who have participated in this. So it's a time to close this session. We are grateful to everyone who has given answer and they have given the logic and they have given the purpose of this. And thanks Shivam for giving a poll also, which we will share. So all the suggestions, if you participant, if you have missed out any suggestion which you think it should also be part, you can pass on to us. 7th is the last date. We can compile it and give it to the SEBI. So SEBI can use it when they were making a final point. All the panelists also, if there is any point which you think is missed out or some changes you want, you can do. So thank you very much, friends. As I told you that our 200th webinar is on 20th December on Catalyst for Corporate Growth, unveiling the next wave of regulatory reforms. I will request everyone to register for this. And the next Friday, we will have program on Forex. That is a decoding the foreign exchange, compounding proceedings, rules 2024. Till then, good night.